all right, if I hear about a really interesting stock or a news ticker comes my direction and I want to check it out, the first thing I do is I evaluate that stock's chart. And it's the first part of my system. And if the charts don't look good, I'm just like, I'm not looking at this anymore. But if they look great, then I'm going to put it in my Yahoo Finance stock list and I'm going to start watching it. So how do I do this? How do I read charts? How did I learn to read charts? Well, you'll be really happy to know that you don't have to be intimidated by those red and green charts with all those candles and people talking about wedges and all those other weird shapes. I make a fantastic living trading options and I don't look at that stuff at all. There are a million different ways to trade options and my way just happens to not require any of that information, which I think is great because it does look like quite the learning curve to try to pay attention to it. But those charts are really important for people who are day traders and like stare at a computer screen all day and make trades based off of that. But for me as just a long-term investor and an options trader with my specific style, I don't have to do that, which is great because I don't want to look at a computer all day. That's not time freedom to me. Okay, so this system that I trade and also the investment strategies that I employ have to do with saving time, and which I think we could all agree that saving time is better than spending time. So the first thing that I do is I review the 5-year, 1-year, and 3-month charts. All of those charts should be green. And I'm going to give you some specific examples on stocks, not as like investment advice, but just to show you what green charts look like and what charts you should be looking out for so that you can come to easily recognize those in the future. Again, okay, so these charts, they should all be going up. They should all be like do, not do. That's down, all right? So like, that's what we want. When the stock is showing that it's going up, what we are seeing there, if we want to go back to the video we just saw before this one, is that institutions are buying that stock. They're pushing the stock higher and they continue to do so over an extended period of time. If you see a stock that has a 5-year chart that started here and ended here, institutions kept buying that at more and more volume during that 5-year period. Same thing with the 1 year. Same thing with the 3-month. Like, those are all really good signs that institutions love that stock and they want to stay involved with it and they keep buying. Okay. So when I look at these charts and they inform what I'm buying, I'm just following what the institutions are doing because they have really top stock traders there and people that know a lot more about the market than I do. And they're deciding that this is a great buy. So I follow what they do. Again, retail traders have very little impact on what the stock does overall. So if retail traders sell out of that stock, it's really not going to affect the stock price. Okay, so on this page, I hope you guys are taking the time to read this and pausing these documents because I don't always say everything in the videos, but there's little tidbits you can get out of these documents that I wrote. But one of the most important parts of this page is that you do also need to realize that when institutions buy and sell out of stocks, they're not necessarily like a guy in a room or people in a room going like in front of their computer like a day trader would be, like buying and selling shares. They actually trade with AI and algorithms, algos they call them, to follow the news. And the algorithms oftentimes buy and sell stocks at weird periods in time. So in addition to you seeing like a stock go up on news, it's because the algorithm actually interpreted that news to be good. And so they bought more shares. And if we see news come out and a stock drops off and the news is good, and you're like, why would they sell this stock when the news that came out is good? It's because oftentimes the algorithms that are trading on behalf of the institutions aren't as smart as human beings. And they oftentimes just do risk assessment. If they see like a big story in the news, they'll be like, oh, a lot of news could be bad, because we're not a human being and we can't dissect information in the same way. And they might sell you out of the stock, sell that institution out of the stock, and the stock price will decline a little bit, but then it will pop back. Okay. So if you see weird stock direction based on good news, you can oftentimes say to yourself as you get more experienced as an investor that, hey, that's probably just the algorithms selling out of the stock at like a time when the stock is in the news a lot to sort of protect and as a risk assessment for the institutions so that like they didn't miss the opportunity to get out before it was too late if that actually was bad news. Okay, so that's a little bit confusing, but you do need to be aware of the fact that algorithms exist. They will continue to get more savvy as we go on in time because AI is getting smarter and smarter by the day. But that a lot of institutional traders trade with algorithms. If you start working with me in my trading options trading system, we're going to talk about these algorithms a lot more and how to kind of work alongside of them. So anyway, that is how we read charts in this system. We look for rising 5-year, 1-year, and 3-month charts. We're going to get into some examples in the next video.